Hey everyone, Codex here. Today what we're going to do is talk about the accumulation phases for Bitcoin. So a lot of people have been lately asking about the perfect time to start buying BTC, and that's what we're going to be discussing in this video. If you guys like the content, make sure to subscribe to the channel, leave the video a thumbs up and a comment, as every bit of support helps us moving forward. So as I said, each time BTC experiences a pullback, we see a lot of new investors willing to enter the market. But one thing these investors fear the most is bear markets and further pullbacks. There is always this fear that the moment you invest, the market may crash and have another 30 or 40 or even 50% drop, which makes a lot of us blame ourselves for not waiting any longer. And here comes the famous question: when should someone start buying Bitcoin? When should you actually accumulate? Now, in this video, we have 3 different indicators that will help you make a choice on whether you should put some money now into BTC or if you should wait longer. So, starting off, we have the BTC Investor Tool, the Bitcoin Investor Tool right here, which is a free indicator. I'll leave a link to it down below in the description. This is from Look Into Bitcoin. Now, in this indicator, we have the green line right here, which is basically the 2-year moving average, the 2-year MA. And as you can see, each time BTC's price drops below it, that indicates a good accumulation phase and a good buy opportunity. The first time such move was recorded, it was back in 2011 when BTC's price was between $4.29 US and $2.14 US. We also had a similar move in the bear market of 2015 when Bitcoin's price dropped below 363 or 360 US. So as you can see, this was a perfect time to accumulate, and I know that this is a big range since the price was between 360 US and 201 US. That's almost a 40% move to the downside from this target to this one. But you have to keep in mind that you will never manage to buy the exact dip. If your goal is to buy the exact bottom, then you will always keep getting wrecked, because there are millions of investors putting their money here. There are millions of investors buying at the same time or selling at the same time. So it's actually impossible to buy the exact dip. At the end of 2018 and in the beginning of 2019, Bitcoin price dropped once again below 5,600 US dollars, below the 2 years moving average. And we had another amazing accumulation phase, another amazing buy opportunity. And lately, the last time it was recorded, it was back in 2020, as well as here in 2019. It was brief here, but in 2020, it was recorded when the price dropped below 7,000 US dollars. Now, currently, the 2-year moving average is at about 29,000 US dollars, 29,473 US dollars. And this increases each day. So if BTC's price keeps its current trend moving sideways for the whole month of January, then our 2 years EMA will surely be above 31K at the end of the month. The longer it takes for BTC to enter a bear market, the longer it takes for BTC to drop down, the higher the green line will be. Now, historically speaking, we went 4 to 5 times below it, so I don't see why we won't go below it if we ever enter a bear market. Is it possible that we don't go below the 2-year moving average? Yes, there is always a possibility. We can never be 100% certain about things, but I would say that it's very unlikely to happen. I would say that if we ever enter a bear market, BTC's price will most likely drop again below the 2-year moving average, and you will understand why with the next 2 indicators. Now, the second indicator I want to talk about in this video is the Bitcoin fair value line, which is the white line right here. And we made a full video about this a couple of weeks ago. So simply, according to the data, each time Bitcoin's price drops below the white line right here, we hypothetically speaking enter a bear market, which usually lasts for a while. Now, unlike the investor tool, the fair value line offers a much wider range. And as you can see, this was a massive accumulation phase that lasted almost 2 years and a half. Same thing right here. It lasted from 2018, from December of 2018 to basically June of 2019. And then once again right here and again in 2012. So the fair value line offers much bigger accumulation phases. And in my opinion, this is very important, and this is good because let's say, for instance, you want to invest into Bitcoin and you don't have money right here for some reason. Then at least you can invest months or even years later. Now, when Bitcoin's price dropped from 64,000 US dollars all the way down to 29,000 US dollars, BTC's price approached the fair value line, which was at about 26K back then right here. However, we didn't go below it, and there is always this debate of the actual meaning of a bear market. What's a bear market and when do we actually enter one? And I said this once before. In my opinion, we can only start talking about bear markets when BTC's price drops below the fair value line. Now, as of the time I'm recording this video, Bitcoin's price is at about 47,000 US dollars, give or take, and the fair value is at 32,849 US dollars. And similar to the 2-year EMA on the investor tool, the fair value line increases each day. So tomorrow you will most likely see another number right here. I personally love this indicator, and I think using it in the next bear market will be super beneficial for a lot of you out there. Now, the third and last indicator that we're going to be discussing is the risk metric that you see right here. Now, these two are basically the same thing. And if you are new to my channel, we have talked so many times about my private risk metrics with the altcoins, with DOT, Solana, BNB, ADA, and Link. I haven't released the BTC model yet, so this isn't mine. It's actually done by Raven Bitcoin. I'll leave a link to his YouTube channel as well as to his GitHub down below in the description, so you can access this for free. Now, what Raven seems to say right here is that a good strategy would be to start accumulating BTC when the risk is below 0.5 on the risk metric. Now, the risk metric of Raven is on the scale of 1, with 0 being the lowest possible risk and with 1 being the highest possible risk. And whenever we go up with the risk metric, it means that it's a good time to start slowly selling. And whenever we go down on the risk metric, it means that it's a good time to start gradually buying. And that means that it's offering a better opportunity for a reversal. That means that we are oversold. Now, what Raven seems to say here is that a good strategy would be to start accumulating BTC when the risk is below 0.5 on the risk metric, basically in the green area. How does Raven do it? So he does it gradually. What do I mean by this? Let's say, hypothetically speaking, you have 10,000 US dollars that you want to invest into Bitcoin. According to Raven's indicator, you would be splitting the accumulation phase into 5 parts. You would be putting 1 out of 15 of the money you tend to invest, which is basically 6.66%. When the risk is between 0.4 and 0.5, you would be putting 2 out of 15 of the money you have of the fiat you intend to invest when the risk is between 0.3 and 0.2, with 0.3 and 0.4, I'm sorry, and that's basically 13.33%. 3 out of 15 of the money you tend to invest right here, 4 out of 15 of the money you tend to invest when the risk is between 0.1 and 0.2, and the rest, which is basically 1 out of 3 or 5 out of 15 when the risk is between 0 and 0.1. Now, to each his own approach. I believe having a riskier approach is slightly better, and by that I mean it's better to start buying when the risk is below 4 on the risk metric instead of 5. Now, some of you would come here and argue and say that a better idea would be to buy when the risk is below 3 or even 2, and on paper that's true, but keep in mind that we barely go into these low regions right here, and we don't even spend much time on them. Plus, us not having any issues before doesn't mean that this indicator is perfect, and this doesn't mean that this indicator will always work. If the bull market prevails now, for example, and you are one of those that intended to buy when the risk was about to go below 0.3 on the risk metric, then you will literally get screwed. And this is why you shouldn't be fearful, and you also shouldn't be super aggressive and greedy when buying. So in my opinion, having a strategy and buying when the risk is below 0.4 on the risk metric is a good approach. This indicator is free. I'll leave a link to it down below in the description. Also, I have my own risk metrics for ADA, BNB, Link, Solana, and DOT, which you can get for free by joining our Telegram. You don't have to pay a single penny for the indicators. All you have to do is join the group and you will find the indicators pinned. Another thing I wanted to mention before ending this video is that you can actually see the potential prices at certain risk levels, to specific risk levels. You can run the code manually and check these numbers each day. And from what we see is that us going below 0.1 on the risk metric would require BTC's price to drop all the way down to 26k, which is also below the fair value and the 2 years MA on our investor tool. So clearly the indicators align. It's not like each one of these indicators is claiming something different. They do in fact give us different results, but they direct us to the same idea. And that's why using all of these at once is much better. Why use a single indicator when you have got 3 indicators? So this was about it, guys. Of course, there are plenty of other indicators out there that you can use to accumulate in case we enter a bear market. These are the ones I think are useful for a lot of you out there. They are also free. Now, BTC is currently still experiencing some sideways movement, so we will see where this takes us. January is typically a good month for many of the alts. It's good for Link, ADA, Ethereum, but it actually isn't that good for the whole crypto market space in general. This was about it, guys. We will see where the market takes us. Thanks for sticking by. Thanks for watching. If you enjoyed the video, make sure to subscribe to the channel, leave the video a thumbs up and a comment, and peace.